Hello, everybody. We'll get started with the webinar at this time. Before we get going, a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, I've got enough responses. Thank you very much. So obviously the topic tonight is technical analysis. We'll clearly look at some fundamental analysis as well, because the two go hand in hand to kind of get an idea of what direction you might prefer on different assets based on which way the wind might be blowing, so to speak. But as we get going, always keep in mind all investments have risk, and that holds true whether you're investing in real estate or whatever it might be. Trading Forex, CFDs, spread betting, and options also have risk. You can read the full risk disclosure statement on our main website. Also, obviously, there's the potential for nice profits, which is why we're all here. So the idea here is the information we cover is not meant to be financial advisement. What we're covering is meant to come from an educational perspective so that you can add to your knowledge base, add to the tools that you know how to use as you put together or improve upon your trading strategy. And basically, I'm pulling from years worth of experience from trading of my own, as well as working with literally thousands of clients through the years, going over ideas and concepts that I've seen work well with helping to build trading strategies. Obviously, with no one trade being guaranteed to win at any one time, but with the idea of hopefully building something that over time brings you more profits than losses. And that's really the key when it comes to trading, is longevity. Now, what is technical analysis? Basically, that's looking at the history, the historical movements on the charts, usually looking at candlestick charts. There are different types of charts, but most traders are looking at what we call the Japanese candlestick charts, which is what we'll be focusing on. And there are different ways of doing technical analysis. Some use indicators. We tend to rely more heavily in the webinars that I do on manual methods of technical analysis, which means drawing your own lines, price levels, what you might call support and resistance levels, trend lines, those sorts of things, and pairing that with different combinations of potential market moves and pending moves that make sense based on the technical analysis and also based on the fundamental news that goes along with that. And so I'm not against using indicators. They certainly are helpful, but I think it makes sense to learn how to read the charts yourself, and then you understand the limitations of the indicators that, you know, they can't take into account breaking fundamental news, and you certainly can as you pick and choose your entry points and exit points. But indicators can be helpful. From time to time, we throw one or two on the chart, but not very often. Okay, so if you have any questions as we go along, please don't hesitate to ask or comment. If you want to add some input, some insight into anything, please feel free to type in the chat box what you're thinking. You don't have to wait to the end, as this slide might presume. You don't need to wait to the end to ask questions or anything like that. Anytime you'd like, chime in. If I'm going too fast, let me know. If I try not to use any trade jargon that maybe beginners aren't familiar with. But if I do that and you're not sure what I'm talking about, please let me know. I don't mind repeating or wording things a little bit different. Now, as we go to my demo account first, let's take a look and see some of the movements. This is clear what's going on here with gold. As I draw a resistance level up here, you see this was back last week, and we're looking at 30-minute candles. So we're looking back at November 14th here. So a good 4 days ago, gold shot up and formed a resistance point right here, a double peak, 1, 2, and straight down. Okay, and it dropped clear down to 1450 or so, 55, and then came shooting back up today. Does anyone know why did gold come shooting back up today? Fundamentally, does anyone know what happened? It's been the driving story for gold climbing and dropping for the past months, really. Yeah, trade war fears again. It's U.S. and China, it's like an on again, off again relationship. The couple that they're happy and they make up, and then they're not happy and they're fighting again. And so, yeah, certainly this could cause the U.S. dollar to weaken as well, and probably the Australian dollar, which we can take a look at. If anyone understands, the Australian economy is tied closely to the Chinese economy because Australia is a very large exporter of iron ore, coal, and their number one buyer traditionally has been China. So if their economy is doing well, Australian dollar tends to strengthen. And when I say if their economy is doing well, I mean China's economy. And if China's economy is not doing well or has reason not to do well, like a trade war, that tends to be bad for the Australian dollar because everyone presumes exports to China then would be less. Okay. But back to gold specifically, these big runs up and down have been happening in lockstep with these trade war fears, trade war tweets, right? Trump tweets out, no deal unless China agrees to do this. And then you see gold shoot up. Or a headline comes out that U.S. China are close to deal. Gold drops, right? And so it's been very, very predictable. If you're watching the fundamental news, if you saw earlier today some of the headlines, and I'll show you them in a little bit, what the headlines were, this movement was entirely predictable from down here up to here. Now, let me ask you, why did gold stop rising where it did? Why all of a sudden was there a wick right here, right at that spot? Why was that predictable? Yeah, it's the resistance line. I already drew it. Maybe I should have asked the question before I drew the line, so it wasn't so obvious. If you're doing your technical analysis, and that's the point of this webinar, it was easy to see where this run might pause, might pull back, right? So even if you got in late and you see this movement running up and you say, woo, something's going on, let me take a buy on gold and put my take profit at the next major resistance level from last week. Boom, you took your profit right at the right spot, and now you're waiting for your next move. Very easy technical analysis combined with fundamental news, okay? If we back away a little bit, 1 hour candles, 4 hour candles, okay, here's our resistance level. That resistance level last week was predictable where it reversed because look, this was last week. Look over here. This was the week before. Look where it dropped down from. It had a breakthrough candle on downward momentum, and breakthrough candles are typically larger than the other candles. So here's the large breakthrough candle. And then as it came back up, that was resistance now right here. So last week, predictable spot, it hit and dropped, resistance level. And again, this week, it hit and dropped, resistance level. Okay, so these spots where there's a big run in one direction, in this case on gold, and then it stops. It's not just by chance, usually, where those movements die out. And you can see last week it was the same area, and the week before it was the same area. So it's predictable, give or take a strike zone you need to give yourself, right? A little leeway. It's not always the exact spot, right? So this was an easy idea of where to take profit. Now the question is, what do you do next, right? How do I know what my next move should be on gold? And so if there's more bad news, what do you think happens to this resistance level? If there's more bad fundamental news, if China now is saying, and I'll show you the article, if China now is saying no deal without rollbacks of tariffs, meaning the tariffs that were already added, they want them removed. And Trump is saying, I'm not removing any tariffs. I just won't add more if we get the deal done for phase one of what they're calling a three-phase trade deal. So in one instance, Trump's saying, I won't raise it more if we get the first phase of the deal done. And China's saying, we're not getting the deal unless you actually lower the tariffs back down. Okay? If they don't get a deal and things worsen and then there's more bickering back and forth, what do you think happens to this resistance level? Yeah, some of you are already typing breakthrough. Could be a breakthrough, because what would happen if there's worsening news on that relationship, that trade negotiation, gold likely could go up further. Okay? That's why do you think gold went way up here in the first place? Up here. Why was it up here at 15, 16? Because of the trade war fears, right? That was the main thing driving it. And some with Brexit, right? Brexit's kind of cooled off right now. It's not the driving story, the driving headline right now. It's more China. But that's what brought the price of gold up over 1,500. So what would it take to break it back through that resistance and back up to 1,500? The same type of bad fundamental news that made it go up there in the first place, right? And so you see the size of this candle here, right? This was the candle that broke this support and brought gold back down. How much did it drop in a matter of 4 hours? It dropped from 1490 or so all the way down to 1468, right? It dropped $22 per ounce in 4 hours between this resistance and this support. That dropped in 4 hours, $22. So whatever good news that was tweeted out, that was in the headlines about China, US, brought it down, brought gold down $22 in 4 hours. If that news reverses, why couldn't it go back up the same amount in the same amount of time? It could. The trading is all about potential, right? Potential. It's not about guarantees. Nothing's guaranteed in life, as they say, except death and taxes, right? So what is possible here, though, is with reverse news. The good news brought gold down with a huge breakthrough candle. The same news in reverse being bad news could cause a breakthrough candle in the opposite direction, potentially of the same size. So what kind of pending order could you put above this resistance so that if it breaks through, you're in on a buy? Those of you who are with me, you've probably made great use of these pending orders already. That would be a buy stop. Some of my regulars are already putting that. Graham, you're saying a buy limit. Buy limit buys from a lower point. Buy limit would be if you think it'll drop down to this support maybe, and then you buy up from the support. That's a buy limit, buying from a lower point. If you think it might break through, then you're buying from a higher point. Buying from a higher point is a buy stop. Now, Graham, you raise a good point. The market could pull back right now, right? And so you could put a buy limit down here at this support right here. If this large candle reverses and comes back to this support, that might be a nice spot to buy up from, as long as no good news leaks out. If nothing reverses the trend to pull gold down through that support. So certainly that could be opportunistic to prepare a buy limit from down here. In case temporarily it pulls back down, you could buy from down here, assuming that news doesn't come out saying, hey, we've got a deal. Well, then you cancel that buy limit as soon as you saw that headline, right? So, but here you're waiting for confirmation of a breakthrough in case it doesn't pull back down for that buy limit to kick in. You can wait for a breakthrough in case there's more bad news. So in effect, you're preparing entry points with your technical analysis for potential unexpected fundamental news that could come out, that you have no idea if it will or not. But if it does, you know what kind of movement you could expect if there's that kind of news that comes out. And you know the unpredictability of Trump. You never know. He could say, that's it, we're raising tariffs, phase one deal off for now. If he tweeted something like that out, what do you think would happen to gold? Yeah, exactly. Could go through the roof, right? So the markets are living and dying with this U.S.-China trade war. And you might think, well, why is the market reacting so much to just these two countries? You know who the two largest economies in the world are? Yeah, U.S. and China, exactly. And that's why it's such a big reaction. Graham, you're asking if it would be wise to put two buy limits. Do you mean a buy limit and a buy stop? You could put the buy limit from down here in case it pulls back, and the buy stop in case it breaks through. There's nothing wrong with that. It's perfectly okay. That strategy would be if you believe in the upward movement more than the down. In that effect, you're saying, I'm going to look for strategic entry points. The purpose of buying from the breakthrough point is because you got confirmation of an uptrend. Must have been big news to break that resistance, right? That's the idea of the buy stop from a higher point. The idea of the buy limit is, as long as no good news came out, why should it break the support? So if it does come back down there, great. You'd rather buy from down there than the high point, but only if you check all the headlines first and you see, okay, nothing new came out, so I trust the support level now. So yeah, okay, I'll do a buy limit from down here. But you should double check the fundamental news, the breaking headlines, just to be sure. You never know. You might see that some great news came out and then you cancel that buy limit. Say, oh, I don't want to buy off that support because I think it might break it. So you always want to check that fundamental news as it's getting close to your entry point, just to be sure. In this case, you're preparing for news that hasn't happened yet with the breakthrough, okay? With the buy limit, you'd be preparing for news you already know, waiting for an opportunistic low entry point in a market where you think gold will go up. So this buy limit would be based on the news that already happened and hoping nothing new happens. This buy stop would be based on the news that already happened and hoping something more happens. Okay, two different scenarios, but both are okay at the same time. And for that matter, couldn't you prepare a sell stop below this support level here in case really good news comes and it breaks the support? You could prepare all three. And if the buy limit kicks in and then bounces, good, you win. The sell stop never activated. If it breaks the support, you hit your stop loss potentially just below the support on your buy limit. You get out of the buy and it triggers your sell stop down here if it broke the support. And if it dropped all the way down to here and broke the support, that must have been really good news for the market. So you would think the momentum could indeed continue down further, right? And you look at these movements and you say, but there's not much more room to drop if it drops all the way down here. If it breaks through, how much more room does it have to climb? When you look at it as 1 day candles, okay, then you start to see, wow, there's a huge potential to drop if it breaks that lower support. Look at all this space. There's no resistance or other support until you get way down further. And same on the way up. If you break the 4-hour candles, it's got a huge distance to here, and then if it breaks that one, it's got another big run it could do to the next high point. So there's huge potential in both directions. The question is, where do I prefer? Do I prefer to buy or do I prefer to sell? And right now, based on the fundamental news, you might be thinking you prefer to buy. But speaking of that, let's look at the fundamental news because I don't want you taking my word for it. The economic announcements, this is the economic calendar. You can find it on many platforms. We can see the scheduled announcements that came in today. No big deal today. A lot of black, which means as expected. A little bit of red, which means worse than expected a little bit on some of the announcements. So that would help to lift gold some. There's no green, by the way. Nothing came in green today so far. So nothing better than expected for the market. So again, that helps gold continue to go up. Now, if we look at some of the breaking stories, what do we see? We see Wall Street slips as trade deal doubts return. Does that sound like it should drive gold up or down with that headline? Yeah, exactly. Up. Okay. By the way, look at the time on this. 3:07 p.m. Right? So it's been a while ago. You had time to react. You could have traded on gold based on that headline. Wall Street falls after report that China uncertain about trade deal 2 hours ago. Okay. As we look down further, we can see some things in this article. Let's see here. One of them had some news about China. they had a key interest rate in China that they lowered. That didn't look good for the markets as well. I'm looking for that article. I don't see it here, but that's okay. There, you see here, China thinks the possibility of a trade deal is bleak due to U.S. President Donald Trump's reluctance to roll back tariffs. That is the sticking point right now. With China saying stuff like that, right? Their negotiators are saying, boy, the trade deal doesn't look good. That's what bleak means, right? Doesn't look good because Trump is reluctant to roll back the tariffs. That's exactly what I alluded to earlier, that China wants tariffs rolled back to sign phase one of the trade deal, and Trump wants to just say, we're not going to roll anything back. We're just not going to raise any more. So this is the sticking point, and it's not looking good for the markets today because of that. That's what happened. And so we can also look here. Trump met with Powell. Okay, Powell's the head guy in the U.S. with the FOMC committee that determines interest rate decisions, monetary policy in the U.S. And usually Trump is criticizing him. He doesn't like it. He wants him to lower interest rates faster to help boost the economy. And, you know, presidents don't get to say what the monetary decisions are with interest rates and that sort of thing. That's this independent group, the FOMC committee, gets to do that. And many think Trump shouldn't be pressuring them. But Trump being Trump, he does pressure them. He actually had a pretty cordial meeting today. They said today and at the White House, and still Powell is saying that, let's see here, the main point is that he will let his monetary decisions be decided by how the markets perform. He says that in the article here. Okay, so he didn't promise the president to lower interest rates more. He didn't promise any specific monetary policies for the U.S. What he said was, depending on how the markets do and what's happening with U.S. and China, that'll determine whether or not he'll lower interest rates again in the U.S. Well, what just happened with U.S. and China was really bad news. If you pair that with his statement that depends on how things are going with U.S. and China and how the economy is doing, then that might lead people to believe, hey, the USD could weaken now. If basically they're saying bad news with U.S.-China could lead to lower interest rates. Typically when a country lowers interest rates, the currency tends to weaken. Okay? So if we look at the chart, then we understand why gold shot up. Fundamentally, it made sense. Technical analysis-wise, it was predictable where it would reverse. It's also easy to see where you could have a breakthrough with a large run, potentially. It's stuck between here and here on the support and resistance. Now, what do we think happened with the USD today, the value? Dropped, right? Here's the 4-hour candles. Look at this drop in the last couple candles, okay? Quite a drop. It dropped from 109 plus to 108.59, so good 40 to 50 pips drop on the USD JPY. Why specifically did I look at the USD JPY? If the USD has reason to weaken, why would I pair it against the yen? Why not pair it against something else like the Canadian? Yeah, strong horse, weak horse concept. We talk about that a lot in the webinars. Why would the yen be strengthening? Yes, safe haven. That's it. The yen is a safe haven currency. So if gold is strengthening, going up, the yen tends to strengthen also. And since it's paired second against other pairings, it tends to pull the other pairing down as gold is going up. And so it's an easy move here. We could see a resistance level here. Okay, this was old resistance here, resistance. And then it reached that same spot and shot down. Okay, easy move. Even if you caught it halfway down after you saw the news, you saw the resistance, you saw the reversal, you could have confirmed that gold also was breaking upward and went with the momentum and the technical analysis saying it dropped off the resistance with a strong reversal, and you could have waited for it to consolidate at the bottom and took even 25 pips profit even if you missed half the movement. Okay? It's called riding the wave, technical analysis wise. And if you look at the, let's say, 15-minute candles, high points were getting lower, low points were getting lower. 5-minute candles, we see the initial run. You still could have traded even after this first drop if you missed it. You see for how many times you could have traded high point, trade down, low point, pause. High point, soon as it hit the parallel line, trade down. Valley, pause your sell. Hits the high point on the parallel line going down, sell. Hits the low point on the parallel line, take your profit. Hits the high point, sell. Comes down, you see it did not reach a lower low point and it came back up. That's a sign that the downtrend ended. That's called consolidation, and you could get out of the position. In this case, with a small profit still. Okay? You understand lower low point, lower low point, lower low point, lower low point, higher low point. You see the reversal? Downtrend ended. Technical analysis wise, that's the end of the downtrend right there. Higher low point, and it came back up to an even high point. Okay? The high point no longer got lower like it was here. Lower high, lower high, lower high, even. Lower low point, lower low point, lower low point, higher low point. Time to stop selling. Higher low point. The downtrend ended. Okay? So even if you got in late on this big breakthrough right here, support, breakthrough candle. You could have been selling even if you missed the first movement. High point, sell. Low point, get out. High point, sell. Low point, get out. High point, sell. Low point, get out. Or if you're patient, you could have just held the one position until it started to go sideways. And once it consolidated and went sideways, you take the profit on the one position. If you got in just on a patient move all the way down. Depends on your style of trading, whether you like to get in and out, or wait for the whole big movement to consolidate and then get out. Very easy when you look at it in hindsight, right? But trust me, it happens over and over and over again. Not every time, but many times. Type okay if you're with me on that. Why the USD JPY sell was an easy move today. And technical analysis wise, you had lots of opportunity even after the big move. The initial large drop, even if you missed that, lots of opportunities still until it consolidated. So zooming in on the smaller candles allows you to scalp in and out. High points, low points, high points, seeing the downtrend channel here. Okay, the parallel line. The bigger candles allow you with a more bigger picture patient move. Okay, different styles of trading. What do you think happened to the Canadian JPY today? Let me back up a step. What do you think happened to oil today? Bad economic news. U.S.-China trade negotiations bad. Gold is shooting up. What do you think happened to oil? Yeah, we looked at this last week too. It doesn't happen every time, but most times it does. If gold's going up, it's because of bad economic news many times, and bad economic news tends to drop oil. Okay, so if we're looking at 1 hour candles, look how much time you had to trade today on oil. Even if you got in late, look at that downtrend. Hour after hour after hour after hour, oil kept dropping. Natural gas would move similar to oil. All the fuel products tend to follow the same sort of pressure. If oil's dropping, natural gas many times is dropping as well. Okay? So you can apply the same concepts to natural gas. So oil, certainly this movement down on oil was driven fundamentally by the bad news coming out about US and China, which gave you lots of opportunities if you zoom in on the technicals to scalp. Small trades in and out with small risk each time. You see the downtrend channel here. Okay, nearly parallel lines here and here. High point, trade down. Low point, get out. High point back to the upper slope, trade down. Low point back to the other slope, get out. High point back to the upper slope, trade down. Low point, get out. Okay, now it hasn't come back to a high point yet. Until the low point stops getting lower, lower, it's still a downtrend. And until the high point stops reversing and dropping from a lower high point, it's still a downtrend. Now, right now, I see the downtrend slowing. Here to here wasn't much lower. Seems like a slowed downtrend, and it seems to be consolidating a bit. The movement seems to be trying to go sideways now instead of running back up or running down. But boy, you had all day to trade down on oil with many profitable opportunities and opportunistic entry points based on the technicals. Graham, no, I don't prefer either one over the other. Whether you're trading U.S. crude, which is West Texas Intermediate, or Brent crude, which is the UK oil, they tend to move very similar. When one's dropping, the other tends to be dropping. When one's going up, the other tends to be going up. It's a personal preference, I think, which you would prefer to trade on. And you certainly can trade on both. Yeah, we have a lot of UK-based clients. If you prefer to trade on the UK oil, perfectly okay. Either one reacts to the bigger picture economic environment. They both tend to react similar. Not exactly the same, but very similar. Okay, so if oil dropped, why would I say it would be good to pair the Canadian against the yen today? Canada's not involved in U.S.-China negotiations. Why should the Canadian weaken today? Why would I want to pair the Canadian against the strengthening yen? What's Canada's #1 export? Yeah, oil, exactly. So if oil plunged, that tends to help bring the Canadian dollar down. And so if you're looking to pair something against the strengthening yen and you want to diversify a little bit, so you're not just going USD against the yen, the Canadian against the yen seems to make sense if oil just plunged, right? And so if we look at the Canadian JPY, what do we think happened today? Well, it plunged. Look at the speed of that drop. Okay, look how much it went down. Simple technical analysis, you could have had a sell stop below this support level here. Okay, breakthrough, support. Comes down to the support, breaks through the support, sell stop activates here. Look at the profit that would have been easy to make on that downward movement. Just simple sell stop below the support level, easy profit, okay? So the technicals combined with seeing bad fundamental news coming out for the markets, you could have done a market sell or you could have had a pending sell stop below any of these support levels. What if you saw it late? What if you saw it late? Could I have put a sell stop below this support level? This was resistance, resistance, breakthrough, support, support. So even if you missed this first breakthrough and you saw the downtrend, you checked the headlines, you said, oh, bad news on US-China, and you missed this first breakthrough on this support, you could have put a pending sell stop below the next support level. And if it broke through that, look at the breakthrough candle. Look at it continue to go. You still could have made from 82.28 all the way down to 82.09, about another 20 pips, even getting in way late on a simple breakthrough strategy with a sell stop here. So even if you got in late today on Canadian JPY, it dropped another 20 pips for you as it broke through the next support level. And that's looking on the 15-minute candle. So that's a bit of a scalping move. But 20 pips on scalping, that's tremendous, 20 pips. And if you got in earlier, maybe 40 or 50 pips profit. Good question. Abdullahi, I'm sorry if I'm butchering your name. I look at all the time frames. I know that for smaller time periods for scalping, It works good on 15-minute candles, 5-minute candles, but I also like to know what's the bigger picture. I like to know that there's a strong resistance point up here. I like to know if it breaks the support, where the bigger support level is down lower. So a lot of times it's helpful to take a look at an outside in look, looking at the larger candles 1 day, 4 hour, and working your way into the smaller candles before you make your move, so that you see all of the relevant data. So predictable movements today on oil, on gold, on any pairings against the yen. What do you think happened with S&P 500, NASDAQ, Dow Jones, other indices, European indices? What do you think happened to them today? As soon as the China news came out, they dropped. Now, they were going up earlier in the day. There was some positive news about maybe there's a deal. And then the bad news broke and boom, they plunged. Okay? That's how quick things can turn. So, and by the way, trading on indices is tremendous for profit potential. We're talking Dow Jones can move $1,000 in value on a single indice position in 1 day. We've seen it, 800, 700, 500 in a single day. So huge profit potential on the Dow Jones, S&P, NASDAQ, the European indices, the CAC 40, the FTSE, the DAX, they all have huge profit potential. If you're not trading indices, you might check it out. What's nice about indices is it has the stability to be diversified already because it has multiple companies in one indice. It's not like you're trading on one company. It's stabilized quite a bit by having a lot of companies in one indice. So you have the kind of the best of both worlds, where you have an asset that has reason to be stable, but at the same time, it's very reactive to macroeconomic news, such as the U.S.-China trade deal news, which then makes it very predictable. So you've got huge profit potential with indices, and at the same time, easy predictability based on macroeconomic news, and also the stability of being diversified across multiple companies. So you might take a look at trading on indices. I'm not saying you have to, but it's one of many assets that have very good profit potential if you're interested in maybe trading on indices. What we saw today was a climb with potential positive news. We saw a resistance point. This is the S&P 500. Resistance, resistance, resistance. You could have traded down just simply off the resistance anyways, but then with the news about U.S.-China going sour, that was an easy move, okay? And we'll see the mirror image from S&P, NASDAQ, Dow Jones, okay? Question is, look at NASDAQ. Is this an opportunity to trade? What do you see here? I see resistance, 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 resistance. I see a huge downturn with the U.S.-China news. And then what do you see right here? This old support, what does this old support become after the breakthrough candle? An old support level that got broken becomes resistance. And look at the upward movement, the pullback now. Look where it's pausing. What could you do here market-wise without a pending order right now? It could be a good opportunity to sell. Why not? Don't we still have bad news about U.S.-China? Has anything changed with that since the bad news came out today? Not that I've seen, okay? Like something changed in the last 15 minutes we've been talking. And so you could take a quick check of the latest news, headlines, make sure nothing changed. You could take a shot at a market sell if you decided to do that. You certainly don't do that because I drew 2 lines downward. You would do it because you agree you should. If you took a market sell, where might you put your stop loss? If you're going to use a stop loss, not everyone does. You could hedge it. You could go without a stop loss or a hedge. But if you were going to use a stop loss, where might you put it? Yeah, exactly. Makes sense. Just above the resistance, right? So you might put your stop loss up here somewhere, because the theory is it shouldn't break the resistance if the news is bad. It should drop back down. if something changed in the market that was good news and it broke the resistance, well, then makes sense to get out on your sell. Now, you want to put your stop loss far enough up that you avoid false signals. Sometimes it'll break through temporarily, then drop, right? Just a quick breakthrough and down. So you want to have a wide enough strike zone, take a small enough trade that you can put your stop loss high enough past the resistance that you avoid those false signals for the most part. And you can put your stop loss as far up as you want without having to risk more, simply by just taking a smaller trade. Okay? Some people like to put their stop loss above 2 resistance levels. Then you avoid many of the false signals when it spikes up and then drops. You could put your stop loss potentially, let me move this line. I could put it above this resistance level up here. Couldn't I? Now, if it breaks through this one, I'm still in on my sell if it drops from the next resistance. And so I have less of a chance of hitting my stop loss and then seeing it drop on me. In order to do that, then you just take a smaller trade. So you can put your stop loss above not just one resistance level, but the second one. And many times, being willing to take a smaller trade and then widen your strike zone and be more patient, many times you'll actually profit more because you're able to be more patient. Or if you're set on taking a certain trade size, then just have a larger balance if you want to have your stop loss further away. Okay? Type okay if you're with me on that idea of widening the strike zone, either with smaller trade size or with a larger balance, so that your stop loss can be not just past one resistance level, but past 2 of them. So you can be more patient. Because we've all seen that. You think, oh, it's a nice resistance level. It spikes up, hits your stop loss, then it drops. And you think, oh man, I should have had my stop loss further away. But why didn't you have your stop loss further away? Because then you're risking more than you want to risk. So the answer to that conundrum is to take a smaller trade, right? Then you can put the stop loss further away and be more patient. A lot of times people are trying to make 5% in one move, 10% on their account in one move, which is great if that goes the right way. I'm not telling you you shouldn't do that. But you know how much you gain per month if you only make 1% a day profit on your account? What do you gain in a month on your account? If you only make 1% per day, I'm not even saying per trade, per day, 1%. What do you make in a month if you gain 1% every trading day? There are about 20 trading days in a month, so it'd be about 20% per day. Okay, give or take. Some days have 21 days, 22 days, but if you can make 1% per day, you're actually doing pretty good. You can gain 20% or more a month on your account. That means in half a year, you've already doubled your account if you're making 20% a month, right? So you have to be patient. You have to keep things in perspective. And don't think you need to make 10% on one move or something. You don't need to double your account in a week. Okay, it's nice if you can. But boy, if it goes the wrong way, you can also blow your account in a week, right? So I think a good rule of thumb, by the way, with risk management is if you wake up in the morning and the first thing you think about is checking that trade that's running overnight, probably the trade size is too big. If you wake up in the morning, you're okay to eat breakfast, do some things, and oh, by the way, let me check that trade. Then you're not so worried about it. You're not so emotionally invested in that one move. Then okay, your risk management is probably pretty good. You're probably not overexposing your account on that one trade. Okay? And you see, this is a perfect example. You see what just happened? You see this little spike up through this resistance? And then it came back down, right? If you had put your stop loss too close, you already hit your stop loss. You just lost. Now look at it dropping. It could potentially go plunge down now. So by widening the strike zone, you're still in the trade if you took a market sell and put your stop loss up here above not just one resistance level, but 2 resistance levels. Now you can stay with it more. You're trading a bit more professionally that way. You understand trying to slice it so close that you can only put, if you've only put your stop loss, I don't know, 4 pips away, 5 pips away, it's hard to be that perfect. even if you're the best trader in the world. If you widen your strike zone a bit, you're still with this trade. You never hit your stop loss yet or your hedge trade yet. You might not start hedging it till it gets up here to buy in the opposite direction on your sell. And now look, instead of hitting your stop loss and losing the trade, if your stop loss was up here like we were suggesting, look, you're in profits now. It went up and came right back down. That happens many times. It tests the support, does a quick spike up and comes back down, or tests the resistance in this case. I think it was perfect that that happened while we were discussing it. Type okay if you're with me, with how that would be beneficial to have had your stop loss above 2 resistance levels instead of 1. And I think we saw it in action, so it was perfect. That many times is the difference between profiting and not. Not being greedy. Take a little smaller trade, put your stop loss further away. I call it widening the strike zone. And yeah, you're going to make less on the move if it goes the right way. But you know what? It's better to profit half of what you wanted to rather than losing twice as much as you wanted to. Okay? All right, tremendous. So NASDAQ's dropping. What do you think gold's starting to do? Let's pull up the gold chart in a second. What do you think gold's doing without looking? If NASDAQ's starting to drop, let's look at gold. Look, green candle, right? The last 20 minutes or so, it's going up. It's uptrending. 5-minute candles, it's trying to climb. So all of a sudden you're thinking, wow, the buy stop pending order makes sense. It's not just plunging back down, right? You're waiting for confirmation of a breakthrough to buy further on gold potentially. What about oil? Pushing down again, isn't it? Oil's trying to drop still. I see a downtrend on these 15-minute candles. Okay, so there's still a lot of signs that the market's not happy right now. Oil's still currently trying to revert back into a downtrend. It's not a strong one, by the way. Okay, it bottomed out a bit, kind of moving sideways, but I see more signals that the market's still not happy than I do see signals that it's happy. So that starts to tell you, as you look at some of these trading opportunities, do I want to sell down on gold just because it's at a high point? Not necessarily. If all the signs are showing you that the market's still not happy. Why should gold drop just because it's at a resistance level and it went up a bunch? You think it has to drop? Not necessarily. That's where technical analysis by itself can fail you. You can prefer one direction over another based on the fundamentals, and you can ignore, in this case, a resistance level to trade down on gold because you feel there's more reason for gold to climb. Maybe you stay away from the sell. Now, I'm not telling you shouldn't sell on gold. Maybe you think there's good reason for it to drop, and if you do, by all means, sell on gold. But the lesson here is try to combine the fundamentals with the technicals, and you tend to maybe be right more than you're wrong then. Okay, any comments, questions, anything anyone wants to add before we end things tonight? We've been going for almost 50 minutes. I think it's a good time to kind of pull back. Right now with the negative sentiment on the markets, you might be looking for opportunities to go with the safe havens, to go against the riskier assets like the indices, but keep an eye on the news because there can be reversals. There can be breaking news the opposite way, and there can be reversals. So look at your entry points with your price levels and pick opportunistic spots to get in and out. Listen, the precious metals, Amir, the precious metals tend to act like safe havens, right? So gold, silver, copper, more gold and silver than copper tend to rise when people are nervous about things. So we can look at, let's look at the metals real quick. We've got copper here, okay? If we go to 1-hour candles, We see copper's on a support level right here, support, support. Now, because copper out of those three is not really a safe haven, why would copper be dropping with bad economic news? What is copper used in? If you're trading on copper, you better know. Industry. Exactly. Copper's used like in electrical wiring, when there's new buildings going up, when there's lots of industry, copper's used a ton. So if there's bad news between US and China, it makes sense. Copper's dropping. It's not the safe haven metal like gold and maybe silver. So it was predictable that copper would drop today, and it did. You've got resistance up here. Right now, if copper came back up to this resistance level with the current bad news, I'd be selling from up here. So Amir, you could look at potential sell limit orders, pending orders, sell limit, that if copper gets back up here, you could sell. That's based on the resistance level and the current fundamental news. Obviously, there's still no guarantee that would win, but it makes sense. Okay. Do I want to trade up from this support level? With the current fundamental news, I don't. There's bad news for industry right now, so bad news for copper. So why would I trade up from the support? I personally don't trust it. Okay, and if we look at palladium, palladium is rising. Why? Because palladium has been viewed more of a safe haven asset, like gold. Okay, so those two metals are not the same. The price of palladium tends to move with the price of gold many times. Okay, so you cannot view all metals that are used in industry the same. Palladium is viewed many times as a safe haven like gold, and copper is not. Okay, good question. So with palladium, I might be looking for a breakthrough. I might be looking for a breakthrough here with a buy stop. If you think palladium should come back down, well, then you've got a great entry point, Amir. Look at that resistance level. You've got a great resistance right here, double wick. If you think it should pull back down, then by all means sell. Okay? I'm not a palladium expert. If you've researched it and you think with bad economy, palladium should go down, you've got a nice resistance level here to sell. Okay? So certainly you could do that if that's what you feel. But copper, you can see what happened with copper. It's directly used in industry and it dropped. And copper certainly is not viewed as a safe haven. Okay. All right. Tremendous. Thank you, everybody, for attending. Thank you for your input. And please come back tomorrow. We've got an earlier webinar tomorrow in the afternoon time, GMT time, and also on Wednesday, an earlier webinar. All right. Thanks, everybody. Bye for now.